Now moving on to number 6, you distribute 800 of the flyers and pay someone $125 in cash to help you out. Now this is actually going to be 2 transactions, because notice that we're using up the flyers that we bought. Remember, we classified those as an asset. So now we're using those up. We're going to have to expense it because they're being consumed now when they get distributed. And then we're also going to have an expense when we're paying this person $125 in cash to help us out. It's going to be like a wage expense. We're not getting too into in this video the names of the specific expenses or the specific assets or the specific liabilities, but we're more so figuring out how to properly classify them in these general accounts over here. So let's start off with the first part. You distribute 800 of the flyers. Now, how many flyers were there? There were 2,000. So right now, under assets, we have 2,000 flyers for a total of $200. Remember, they're 10 cents each. So if we distribute 800 of them, what percentage of these flyers are we distributing? Well, 800 over 2,000 gives us 0.4, so 40% of the flyers we're distributing. Meaning that 40% of this $200, of that $200 asset is being used up. So 0.4 times 200 gives us 80. So what happens is $80 of the flyers get consumed, they go away, so the assets go down by 80. Right, so 800 of the flyers are gone at 10 cents a flyer, so $80 of assets get consumed, so there's $120 of flyers left. So that asset account, that flyers account, is now going to be $120 that's left. So 80 gets consumed, so 80 gets consumed, and so it's going to be an expense here. So we're going to have 80 under expenses. And notice that we have a minus expenses here. So basically any number in this column, as well as the dividends, any number in the dividends column, they're being subtracted. And so notice that it balances out. We got negative 80 here on the left side, and then we got negative 80 on the right side. So left side and right side are balancing out. So that is the first part of this transaction. Now the second part, when you pay someone cash, $125 in cash, that's a separate expense. So that's going to be $125. It's like a wage expense, as I mentioned. And then you're using cash to pay them, so your cash is going down by $125. All right, so we got minus 80, minus 80, minus 125, minus 125. That's how you input this transaction into the equation, and everything is balancing out. Moving on to the 7th transaction. So you provide 35 hours of service for the month at $25 per hour, and then you receive cash for it. So what's the total revenue that you generated for the month, right? This is going to be revenue, the service you provided, the lawn mowing service. So 35 hours times 25 per hour, that would give you $875. So you made $875 worth of revenue. Notice that that is a positive. All of this in this column is going to be a positive. And then you received cash for it, which is going to make your assets go up. So this is going to be plus $875. Notice left side, right side are balancing. Moving on to the 8th and the 9th transaction. So the 8th transaction, gas for the lawnmower costs $80 and was fully used. It was paid by credit card. So the fact that it was fully used, it was consumed in this period, so that's going to be an expense, minus 80. And the fact it was paid by credit card, our liabilities are going up by 80. So notice that both of these are netting out to 0 on that right side. We got plus 80 and then minus 80. Now, if it said something like the maybe half of the gas was used this month, then $40 would be an expense, and then $40 would be an asset because you still have $40 worth of gas left. You could sell that as an asset to someone else. Perhaps not for the full 40, but assuming that you can for the full 40, you classify it as an asset. So in that case, you would have 40, 40, and then 80, right? So you'd have 80 minus 40, which would give you 40 on the right side, and then you'd have 40 on the left side. So it would balance in that case as well. But because it was fully used, that full $80 is expensed. And then number 9, you paid $30 for maintenance on the lawnmower with cash. So the fact that you paid cash, we know our assets are going to go down by 30. Now, is maintenance an asset or is it an expense? It's an expense. Now, it can be in future chapters, maintenance can potentially be capitalized as an asset, but it would have to be something like enhancing the asset. So maybe if maintenance was like we bought a new part to the lawnmower that it enhances its capacity, so enhances the amount of lawns that it could mow, then potentially you can capitalize it. Basically anything that enhances an asset's capabilities can be capitalized, so then you'd have a plus 30 here. But the fact that it didn't say any of that, it just said paid $30 for maintenance on the lawnmower with cash, just from that sentence alone, and then just that low amount as well, we can assume that that's just an expense for the period. And moving on to the 10th and the 11th transactions. So the 10th transaction says that Kijiji ad expires. And if you remember when we described this Kijiji ad when we first bought it, it was an asset. And then once it expires, it means that it's been consumed within that period. Right? So then what that means is that it's no longer an asset, it's no longer something we can sell, and it becomes an expense. So what would happen with the 10th transaction is that Kijiji ad goes away on the asset side, and now we have an expense. Now this could have been done in a more tricky way. So for example, maybe, let's say this is like September, and let's say that you bought the Kijiji ad on September 15th, and then this is for the month of September, so September 30th, the month would end then. And so this Kijiji ad, because it's a month long, it's going to expire October 15th. So it has a useful life of 1 month. But since we got to get a balance sheet on September 30th, then we would use up half of that ad. So only half of the 95 would get consumed. So what would that be? 47.5. And then the other 47.5 would be on the income statement for October, right? 47.5 would be an expense for the income statement in September, and then the other 47.5 in October. That's a little bit more advanced, but thought I would mention it, that it can be something like that can be presented in a more tricky way. But the fact that we bought it, assuming at the beginning of the month, and then the ad expires within that same month, that full 95 is being consumed, right? So it goes down by 95, the asset goes down by 95, and we have an expense for 95. Now, the 11th transaction, you got a credit card statement for the month and paid in cash. And so on your chart, you're inputting all these transactions on the flow chart. You could basically go back up and add up all of the liabilities except for the $500 that you borrowed from your parents. That wasn't part of the credit card, but anything else was, any other liability that came about was from the credit card. So we had what? The business name, we bought the lawnmower, we bought the Kijiji ad, and then we also purchased the gas for the lawnmower for $80. So if you add all of these up here, you'd end up getting $625. That's what the credit card statement would be. So the total liabilities, excluding the $500 from your parents, was $625 from the credit card. Now we're paying it off. So what that means is we're paying it with cash. So cash is going down by $625, and then the liabilities are going down by $625. And so the only liabilities that are going to be left now is going to be the $500 that you owe your parents. And then finally, moving on to the last two transactions. So transaction 12, you paid yourself a dividend of $100. So you're paying yourself cash. That's going to be minus 100. And then that's a dividend. So that's going to be this over here. So notice we got minus 100 on the left side, and then all of this is minus, right? So this 100 would be minus 100. So left side and right side balance. And then you repaid your parents $100. Or remember, you took a loan from your parents for $500. Now you're repaying 100 of that 500. So 100 in cash goes down again, and your liabilities go down by 100. So the total liabilities now at the end of the period, because this was the last transaction, the credit card statement the credit card we fully paid, the $625, you paid 100 of the 500 you owe, so now you owe 400. So that's going to be the ending liabilities, right? So we got the dividend and then repaying the parents.